Hello, this is the price action for yesterday. The EURUSD 3-minute chart, we had a tight bear channel. Let's go up to the 50-minute chart to see how this formed. So the day prior, we were in this range. We've had sort of rangy price action after this overshoot, and we came back up and retested the high. And then we broke on out of this channel, and we've been in this range. And we've come into yesterday in the range, and we've trended up the whole day. And on that third press of that channel line, we've failed. So, usually get those two legs back, which we get. I could probably draw those legs in here. So you get your leg there, and your leg there. And we have those two legs back there. We were in this spike and channel pattern last night. It was a tighter channel. And we broke out, and then we came down and retested the low of the channel, and that was the end of our night. And then in the US session, it's came back up all the way and headed on down. So even if you held your trade there and tried to hold through the US session, you would have got stopped out massively. So very, very hard to hold anything through the London session to the US session if you're trading on smaller time frames. Okay, so the start of the night, I sort of refer to these as lefty nights, like left-handed nights. It feels a bit strange trading these nights always, because the market's always changing slightly. So I'll just give you some examples of how I started off the night. So at the start of the night, I could see this channel form, so I have my blue channel on there, but this channel here didn't look like this. I actually had my channel probably more like this. How would I had this? We would have had like expecting something like this. So that's how I think I had my channel at the start of the night. So I had drawn my downtrend on there, and I was expecting, well, we are hitting the bottom of the channel. We'll probably head up here. So this is me watching the open here, and I've got my channel wrong. It's not wrong. I don't know that it's wrong at the time, but I'm already prepared. I've got my channel line on there. I can see this blue channel and everything, and I've drawn in all of this, so I've got my blue channel on there. And I see it trying to break out of here. Now, we're always thinking the highest probability, so we're always thinking this is going to fail and we're going to head up, but that's not always the case. It can go the other way, and that's why you got to watch the battle. So you cannot just chase price out of here, but you can clearly see that there's a breakout pullback there, and it works. So there is a good chance that the bears have won here and we are heading down. So we spike again. But at that stage, of course, I'm not chasing this spike. If I take this trade here, I'm taking a scalp out, and it's rare for me to take an overshoot trade, the first one. I rarely do it. And even though I see it happen, I saw this trigger, I had my circle on there, I had this line dropped in there, and I was like, I'll just watch whether this works. Aha, it worked. So now my channel is sort of the opposite side. So overshoots are breaking through, and that usually leads to a stronger trend. So once you start overshooting, you're breaking the support in a downtrend, and you're just smashing through support, and you're heading down. So it's actually a strong move. So what I do then is I have to adjust my channel. So I adjust my channel. If I could get back to where I had it. Yeah, so I have to adjust this channel. I don't adjust it straight away. I believe I just do my regular routine where I just pull this down and go, oh, we've overshot, great. And I just keep pulling down to the end. And then we pull back here. So this is where I start to look at the channel, and I start to think, oh, I'll get my channel on. But I can see that the first real pullback is to that side. So I pull the channel to the pullback, and that becomes my pullback here. So there's a spike, there's a pullback, and now our channel is on the opposite side of what we're expecting. So the first little bit of doing that does throw you out a little bit, but you have to be able to switch You have to understand that the market can do both things, and the whole idea is that we are not we're trying to keep our bias to a minimum. We're trying to stay objective, and if this is a victory for the bears and the overshoots are working, so we've overshot that blue line, then we just pull our range down. And now we know we're going to get vacuum tested back up probably, so we just wait for the pullback. And your first trade is here. So we get the pullback, so that's a very strong move. The first attempt up is probably going to fail. That's how simple it is. It's below the EMA. It's the first pullback. There's a strong move before it. You just take that short for a scalp at least. And if you miss that one, it comes back up. But at this point, I'm drawing my blue. Of course, I draw this in because we've had a pullback here now. So I'm expecting this now to channel. But every time you're getting a pullback, you're expecting a channel. And then we channel down. We get another entry here. You can take that because the lows are here for a scalp. And then we get this strong bullish bar that hits the EMA. It's quite a big bar. It fills the whole space there. We then start channeling up here and we overshoot here. Now this does look like a second entry short. First entry short, pull back, second entry short. And it is a second entry short, but it doesn't work. So, you're going to get scratch trades like this. So just say last night you traded and you got this trade, you got this trade, you got scratched out on this trade, you took this trade and you got scratched out on this trade. Your win rate is going to be below 70% for the night, even though you came out on top and you got a couple of scratches. You're still going to have a lower win rate. So win rate can be deceptive. If you exit quickly and you just take your losses and not everything's going to work every single time. And there are reasons why this didn't work as well. And I'm going to talk about that now. So I try and mark these up, the ones that really can catch you. And there was a couple that can catch you. So we have to remember that, yeah, we're playing a smaller channel here. Okay, so there's your smaller channel and it failed out there. So you are expecting at least a scalp, at least a couple of little legs back. But we are breaking out of a bigger channel here. So this is our first break of a channel. So we are expecting this to fail either way. But it's breaking out of a bigger channel. It's a bigger move, more bars required. So sometimes this sort of stuff can fail. It didn't break and fail below the channel. We broke out of the channel. When you break out of a channel, there's ranges and things that happen. We've also overshot here, which can cause a range. So there are reasons why this trade came back on you and can get you out for a scratch, or you can lose an entire trade. So if you're scalping, your stop is probably here. So it's definitely getting hit. If you're swing trading and you're seeing this as a swing trade opportunity, then your stop is probably more up here, and you're swinging it for that measured leg here. So you're pretty safe. So I guess this is more of a swing trade opportunity than a scalp trade opportunity, is what I'm trying to get at here. And maybe switching to a swing here and a swing stop is a better option once you break out of this channel. But it's going to happen. You're going to get scratches. You're going to get things that just don't work the way you think they're going to work. But if you stick to the rules of the price action, you learn from Mel Brooks, Lance Beggs, Mack, from Pats, and all those type of guys. They're going to give you something that if you master it, you can get that 80-90% win rate trading it. You'll never, you have to be able to take a loss. You have to be able to take a scratch trade. And a scratch means that you may get out break even on these trades. You may get out with a 1 pip and a break even, so you're losing a quarter of what you normally trade. But it will affect your win rate. So you will get scratches, things will happen, and you'll make mistakes. And that's why you should sim trade for at least a year. You should be reading books, sim trading, demo trading for 1 whole year and getting 20% on your account every month and having a good win rate and being able to do it before you even trade any money. And then when you start trading, trade tiny. I'm trading very small right now. My trading is tiny. I have a small account. And I'm at the beginning stages of my live trading. So yeah, this is a couple of year endeavor to get to this sort of point where I'm at now, a year and a half of effort to get to here. So it's a long road. Yeah. But you got to understand that losses will occur, even though this looks like a really good second entry short. And this may work a lot of times, but because you are breaking out of this bigger channel, bigger pattern, more bars required is basically the rule. Maybe this is a better swing opportunity than a scalp opportunity, wider stop required. And there is bullish momentum here. There is strong bullish bars happening. So there is other stuff happening there, but yeah. So that's what I'm trying to get at. You're going to get scratched out. You're going to get little losses here and there, but just keep plodding away. And if you get 2 scratches for the night, but you have 3 winners for the night, you'll still be ahead. You'll still hit your target. So don't stress. Okay. So yeah, and then you get this second opportunity down here. So second opportunities are always better. So if this did fail and then it fails again here, and you get that sort of lower high move, fails to break out again, that's definitely going to work. But you have to be able to see, I hope you can see how this has failed. So it's sort of, we've expected it to fail here, it hasn't, it's come up. And then we've re-hit into this, we've started this other little range here. And then we've pulled back up again and tried to go up again. And then we've failed out again. And once you sort of even fail out below that line, below here, you could drop your limit order in, really. That's probably a bit too low. Yeah. But yeah, really, your limit order is probably going in there. And you're just dropping it in. You're waiting for this to break the low, and then you're dropping in your limit order. That's another thing you got to do too. So when you're trading, like if you drop your limit order in here just straight away, that's a really bad move, because this is your signal bar. So your entry bar is the next bar, and you're just entering so quickly that you may have just messed up the entry. So you really want to see this breakthrough, and it may take, like, if on a 3-minute chart, it may be 30 seconds before you put your actual limit order. It can even be up to a minute, 45 seconds before you're convinced that this has really worked, and then you drop your limit order in. So there is a skill involved in putting orders on. It's like the whole process can mess up. You've got to have a good signal bar. You've got to have a good entry bar. Then you've got to have a good follow-through bar. And you got to get all 3 of those correct. If you get a bad follow-through bar, maybe you exit at a scratch at a small loss, or you exit at break even if you can. And that's just how it works. So anyway, so we get that down there, and then we head down here. So after you've had a channel and you've had a break and you've had a couple of legs down, and there is sort of a wedge formation here as well. So there is going to be people buying down here. So there's 3 presses, it's a wedge, and it actually is a bigger channel. Like if you look at it, there's a bigger channel in play here. So this is another thing I want to talk to you about. Another thing you've got to understand as well about channels. So there's channels inside channels, which I'm sure you're aware of now. You've been watching these videos on my channel. So if I pull this out, you may not get the fit you want. And I see people always pulling channels out and complaining that it doesn't fit and all this and lots of things like that. Yeah, it doesn't fit because there's 2 channels in here. So if I just undo that, that's 1 channel here. The first swing is here. So you got to put it on the first swing. So there to there, basically. And then this breaks out here, and that's another channel in there. But there's another channel even here. If you go up to the 15-minute time frame, you can clearly see that the channel on the 15-minute it looks more like this. There's still a channel in here. There's still a little channel in here. There's your first pullback, and there is a channel, but there's also a channel here. No doubt there's a channel here on the 15-minute. It has a break and it comes down. But this little channel here also has a break and it comes down there. So you have to be able to seal this stuff. It does take some time to be able to register all of this. But it does come. I do all this live. This is all what it looks like while I'm trading. I'm literally doing this live. I don't do this after the fact. This is all drawn in as I'm trading. live, and these are my real channels at the end. I don't adjust them for these videos. This is what it really looks like. Yeah, you just get better at it over time, but that's what you have to do. So you're constantly looking for the overshoots, and then drawing your channel. So that even overshot there, you can see I've even got my little micro channel line on here, and I see the overshoot, and I just start drawing this box again down to there, and then I see it break out of there. Maybe I take that trade, but I wait for that pullback, and we're in a range. We've had an overshoot of that micro channel. It's come back again. We can go short there. We've got a lower high. Then I'm looking to pull this up from there. So I'm like, we've got a lower high. There's your channel, and then you've got your channel this way. So it just takes some effort to learn how to do it correctly. And then we head on down here. So you can almost jump in anywhere here. Once you know the channel is here and you've got confidence, you can start to even scalp and jump into these sort of trades when you start getting lots of bearish bars in a row. I don't do that as often now. I'm really trying to tighten my trading up and just take really good trades. And some days I don't have the best days, but I'm getting there. I believe I will. I believe I'll be making a pretty good living doing this one day. Yeah. But there were stages where I didn't think I could do it. Even when I was demo trading, I was thinking, this is just so hard. Like, how does anyone do it? And that was when I started to just focus on channel drawing. And I watched Mack draw channels, and I watched Al Brooks, and I even saw Lance Beggs draw some channels. And I started to draw my channels. I draw my channels differently than them. You won't see them drawing these ranges in here and think these are all things I figured out on my own. I just figured out what was going on. And I figured out how to tilt my channels, how to draw my channels all on my own. I didn't really learn that I did learn channels from them, but the way I do it and the way I set my things up is all my own way of seeing it. So this may not work for you. Maybe their way will work better for you. And that's okay. Some people don't draw channels. I've talked to other traders who are really big time traders, and they just see the channels in their head, and they don't need to have any channels on the screen at all, and it just makes no sense to them to put them on there. But for me personally, I see it as a receipt of how well I read the market and how well I saw all the moves, and it also shows me where the moves are going to happen. They are my secret weapon. Learning how to draw channels well is is the best thing that I learned in trading. It is literally more important than learning how to read the candles. So if you can draw lines, you can then see where all the entries are. Automatically what a good entry is almost from a bad entry. It wipes out a lot of bad trades. Because I'm not going short here, but I'm not thinking we're going to keep on going down here. I know there's a channel in here, so yeah. So anyway, we head on down there, and then we start getting profit taking. So this is where it happens again. So we can see though that there is sort of a wedge there. There is the three presses on this here, and people will buy on the third press. It's actually not a bad strategy to be buying on that third press and counter trending, but it is more risky. It is more dangerous because things can just keep going. So that's why people tend to avoid it and wait for the higher low here and head up with it. But look how many bull bars there are in a row. So you definitely cannot take that failure there. Even though it looks good, you cannot take it. We've also had a break and a new low for the channel, and we're at a measured move target. Profit taking is going to happen. So there is going to be some sort of pullback there. And we've had a very big down, and now we're heading big up. We could just end up in this trading range. So there's a lot of reasons why this, this could get vacuum tested up here. And then we head up, and then it gives you another entry here. That does look like a good entry. It's giving me a good rejection off there. There's a failure there. But again, if you drop in your limit order too early, it's going to get you. So if you drop in your limit order here, and this turns bearish for a split second, and you drop your limit order in the first five seconds, it's just going to get you, and it's going to go down, put you in, and then take off on you. And now you're in a failed second entry short, and it's just going to head up because everyone's trapped there. You're not the only one who got trapped there. Everyone got trapped there. So it's just going to head up on you. And then we sort of overshoot again. And this looks like it failed. So first entry, pullback, second entry. So I should really highlight this as well to show you again that this looks like it failed here. And I'll just put this on there. So again, it looks like, oh, we're definitely going to fail in here. But if you put your limit order on really early, straight away, without seeing this really break through those lows and then come back and tick you in, then your entry bar is bad. And also you've got a lot of bullish momentum and you're at the profit taking area. So it's dangerous. And another thing, you've broken out of this bigger channel. So more bars required, so there's reasons why these trades are failing, and you've got to understand why these trades are failing. I get trapped in occasionally these two, so don't worry about it, but I'm trying to minimize that. I journal every day. I try and figure out what works, what doesn't work, and I have to do that all on my own. No one's holding my hand. I don't have any of those authors of the books who wrote all those books telling me what to do. I have to do it myself. I have to write all my trades out, write the positives and the negatives for each one, and do all that. That's why I made the software that I made. It helps me. And anyway, we end up heading up here, and we do double top here, but this is just so bullish. It would be silly to take that entry there. But I think this entry, after you get that lower high here, and that is the third attempt up, and it fails there, that is a good trade. I did take that trade. So yeah, and just hold it. But that is the night. Yeah, so scalpers will have higher win rates. So, a really good scalper is going to have that 80-90% win rate. And it is achievable. I've traded months at that sort of rate, even with scratch trades. So your broker will say, yeah, it's lower because you've got scratches and stuff. Or you can even get that. I've had that rate with even scratches. So, you can win like many days in a row before you even take a loss when you're scalping, when you're really trading well. Yeah, but you are going to lose. See what I'm saying? You're going to lose. But if you get good, you're going to win a lot more. It just doesn't matter. But it does matter in a way. You want to learn why you lost. So I've explained why I believe these trades are not good, and there's even more reasons that I'll go into in other videos. But the general gist of it is you have to get everything correct. You have to have a good, you have to have room. You have to have a good, you have to have a good setup. You have to have a good signal bar. You have to have a good entry bar, and you have to have a good follow through bar. And if any of those mess up at any point, then your trade is probably not going to go as well as you think. So that's just how it works.